Hello, my name is Adam Hewison, co-founder of MarketClub. Welcome. I have some exciting news for you today. You can try out MarketClub for 30 days for just $8.95. That's the price of 2 cups of coffee at Starbucks. But you get much, much more than Starbucks. Here's what you get. You have total access to all our cool tools like our trade triangle technology, our talking chart technology. You will not find those anywhere else on the web. Why? Because we've taken my years of professional experience trading both in Chicago and London, combined that into a simple program that you can follow easily at home. But wait, it gets even better. Just for trying this out today, you can get a 1-year free subscription. I'll have a chance to win a 1-year free subscription to MarketClub. Here's how you do it. Just join for $8.95, try us out, and you're automatically entered to win a subscription. We'll put the subscription on a tablet, a cool Wi-Fi tablet that you can take anywhere and track MarketClub and, of course, everything else on the web. So do it today. I'm Adam Hewison for MarketClub, where members profit. I'll see you on the other side.
Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your midday market update for Friday the 30th of September. So please take advantage of that offer we have. You can win a free 1-year subscription to MarketClub on an HP Wi-Fi tablet. Just go to our blog, I'm sure you'll enjoy that. Well, here it is. It's crunch time for the markets and portfolio managers everywhere. It's not often that we have a weekly, monthly, and quarterly markets all ending on the same day, but Q3 is playing out that scenario this time. I think there's only one word to describe Q3, and that is volatile. Volatility ruled the markets in Q3 and has pushed many investors to the sidelines. That is certainly the conservative position to have at the moment. It is better to be in the cash than be long the equity markets, in my opinion. I find it hard to believe that some of the pundits say, well, we can go into defensive stocks. My question is, why? Why would you want to be in the market when it's going down? It just makes no sense to me. The philosophy behind our trade triangle technology is very simple, and that is we want to be long the market when it's going up and either short or out of the market when it's going down. The reality is the market can only do 3 things. It can go up, down, or sideways. That's it. How many things in life do you know that are that simple? Yesterday, we talked about the major trends in the markets and how important it is to know the direction of the trend for each and every market you are interested in. And sorry about that. It's a Windows machine, so that happens, as you probably are well aware. But basically, in today's video, we'll be focusing on 6 markets that we track, I should say, in a little bit different way that you may not be familiar with, and that is we'll be looking at them in a different way. As always, our goal is to share with you ideas that are tried and true and have been used by generations of successful traders. I'm sure you have heard of the expression, there's nothing new under the sun. That expression can be applied perfectly to trading. So with nothing new under the sun, if you use these tried and true methods I'm sharing with you today, I'm sure you too will be successful trading the markets. Now let's go to the 6 major markets we track and update every trading day and see how we can create and maintain your wealth in 2011. So here we are at my portfolio page. And here are the 6 markets we track, as you can see. And we're seeing a little bit of pressure in the equity markets. And guess what? The major trend is down. So let's just go to that market right now. And I'll broaden this page out a little bit so you can see more. And here we are. We are at the S&P 500. We have a candlestick chart on. And you can see we are tracking 3 months. And you can see that our monthly and our weekly are down. Now, one of the things I want to share with you is something that most people don't look at, and that is quarterly charts. So I'm going to go up to my time frame here. I can go from 1 minute to a quarter so you can see how much data we have for you as an analyst. So you click on the quarter, and I'm going to click out to maximum. And you can see that I'm going to take the triangles off, make it simple. You can see basically that for the quarter, we're down really a lot from the previous 2 quarters. And I think we are just beginning this particular move. And again, you can do the measurement. We've done this before with Fibonacci. We go from the highs, potentially all the way down to the lows. And you can see we're looking at 935. I think we could be closer to 1,000 to 950 with a Fibonacci retracement and still basically be in the potentially a longer term bull market. But certainly the reality is the market's on the defensive, both on the quarterly. We closed last quarter, we closed at 1320. We're trading right now 1140, almost 200 points lower. Last month we closed, let's go to the monthly. It's really easy to do with MarketClub. Just go to the monthly, and you can see there again, we are under pressure here for the month. We've had 5 months in a row where equity prices have been on the defensive. Now I ask you, does that make sense to be in a defensive position if the market's going down? It doesn't make any sense to me. The reality is, if you looked at our last signal, I'll take this off, make it simple, but if you look at our last monthly signal on this, and I'll put it right here, you can see it was right here. And you were able to get out at this level, and you can see, oh, let me just take this off the screen. You're able to get out at 1272 and get back in at 888. I mean, why sit through so much pain? Then you got out and you got back in, and now you're out again. So the reality is with the monthly charts, you're not going to get in and out of the market that quickly, but you're going to catch the big moves if and when they do occur, and that's the important thing. These aren't, at the moment, buy and hold markets. They're trading markets, and you have to be flexible to be able to trade these markets. So here we are. We closed last week. We closed at 1136. We're currently trading at 1149, so we're up about 13 points for the move. And I want to just put these on the board for you. So let's just get my telestrator on, and we'll look. This is the S&P 500. Okay, so I'm going to write it right here. So first thing I want to do is and Q2, we closed at 1320. Okay, in last month, I'm just going to LM. Last month, we closed at 1218. And last week, LW, we closed at 1136. So you have to say on the quarterly, you're down. On the monthly, you're down. The only thing you're up right now is the weekly, which is a small gain for the week. However, it is not a positive trend. If you have two of these out of the three being down, it tells you, much like our trade triangles tell you, that the bigger trend is down. And I think that's the most important thing to remember as a trader, is to look at the bigger trends and go with those big trends. So let's go to our next market. I'll take everything off the screen, clear this up. And the next market, of course, we're looking at is silver. And the silver picture is a little bit different, and that's what I want to share with you. And let me just clear this off the screen. And this is really, these quarterlies, monthlies, and weeklies don't usually all coincide the same time at the end of the week, the end of the month. It's amazing how it's all seemed to have happened on a Friday today. So let's go to our next market. In the next market, as you can see, and I'm going to go to the quarterlies on that. I'll start with the quarterlies, and this is the quarterlies on silver. And look at this silver. I'll take this off the screen, but look at this on silver. This is not necessarily good, and I'll show you the reason why I say that is because here's the last two quarters. Here's one, it's the first quarter, and the second quarter is the third quarter right now, and we are now lower for the year. And that is not a sign of a bull market, not at all. And clearly this area right here is support, at least for now, but I think the market's going to be on the defensive. You don't put this much damage into a market and suddenly recover. It's going to take quite a while. As you can see back here in the July 08 period, we were down 2 quarters like we are now, but it took another quarter to really get the market sort of moving up again. So whether this happens in the silver market, I don't know, but the reality is these markets aren't going to just suddenly recover and be raging bull markets again, not for a while. So let's clear everything off the screen and go to gold, which is our next market. So what we're looking at, I'm sure you're seeing a pattern here, and the pattern I'm showing you is you want to start with a quarterly, and here's the quarterly on gold. It's up for the quarter, up for the year, up for pretty much everything. So if you look at gold right now, we closed last quarter, we closed at 1500. So let me just get my telestrator on. In fact, let's go to probably a monthly chart. You see we're higher on the quarter, but let's go to a monthly chart. And that's just very simple to do with Market Club. And here we have the monthly charts. So again, we closed last quarter. So if you look at that, we closed right around 15, which is right around these levels here. And I'll put my telestrator on. So in Q2, to reiterate, in Q2, we closed in gold. This is spot gold. It's right here. We closed at 1,510 cents if you want to be absolutely perfect in this. In last month, we closed at $1,823 an ounce. In last week, we closed at 16.56. Currently, we're trading at 16.26. That's $30. That's minus 30 from here. It's basically, what is that? Almost 200 from last month, and it's still up 100 plus $126 from last quarter. So on a quarterly basis, yes, it's looking better. But if you put our trade triangles on, I'll do that right now, you'll see that our trade triangles, the monthly, longer term, still positive, but the weeklies and the dailies are pointing down. So this market is going to have some work to do before it recovers from this big top that we've seen right now. And this is a top for the time being. This is people can say the market's going to go higher, it's going to do this, it's going to do that, but the reality is the market's telling you that you're down for the month, which is really a first for many ways, and you're down for the week. So I think you've got to give this market some room to either regroup to go higher, if that's going to happen, or just regroup and come back. I mean, we've come back from these lows here to here. That's a pretty big move from 1,900 down to 800, almost $1,000, $1,100. Could it come back to $1,000? It's debatable. We'll have to see what happens in the trade trials. But that's the gain thing, is when you come to the end of the quarter, you only have to do this 4 times a year. Q1, Q2, Q3, and Q4. That's all you have to do. But I like to look at the markets on a quarterly basis and a monthly basis and a weekly basis. So generally speaking, it gives you a real sense of the trends and where the market has been, as opposed to just what happened yesterday in the marketplace, which is very, very short-sighted in my opinion. So let's clear everything off the screen and go to our next market. Next market we're looking at is crude oil. And we've got a monthly chart up here, and as you can see, for the last several months, in this case 5 months, 1, 2, 3, 4, 5, the crude oil market has actually been going down and not up, which is a surprise to many, many people. And also, the nice thing about looking at longer term charts, monthly charts in particular, it gives you a sense of where the support is. And I'm going to just draw this line in and show you what we're looking at right here. This is kind of where the support is. Now, if we go through this level, we may actually have a bounce up. But if we go through this level here, then I think we could potentially go down and see the $70 level, and even perhaps even the 65. But the reality is, you have to look at the monthlies and the quarterlies again. So let's just do the same exercise. We closed Q2 at $96.82 a barrel. Okay, last month we closed out at 89.10, and last week we closed out at 80 even, sorry, we're currently trading. And if you look at where we are right now at 80.66, not a big difference from the week. So it's not, even though this market has really had opportunities to rally, it really hasn't rallied. So we're down some $16 on the quarterly. We're down $9 on the monthly, and we're about flat on the weekly. So that's not exactly a bull trend. And again, monthly, weekly down. They're the big trends to watch in these markets. So really pay attention to them. If you're going to go anyway, if you're going to go on any side of the market, always trade with the major trend, because it gives you the edge that you need in trading. So let's go to our next market. Next market is going to be the dollar index. And here's a little bit different picture, and that's why I want to share this with you. So we're looking at a monthly chart. And if you look at the monthly charts on this, you can see that all of our trade triangles are positive, positive, positive. And if you look at Q2, where we closed on Q2, in this market, we closed at 74.30. Market's currently trading at 78.47. Last month, this is Q2, by the way. We're coming to the end of Q3 today. But if you look at last month, we closed out the dollar index at 74.11. Now, remember we talked about this market being sort of sideways for quite a while, which is all this time window here. Yes, it was sideways. And we had last month, we closed the dollar index at, last week, we closed at 78.30. And if you look at where we are on the chart right today, we're at 78.46. So the market's a little bit higher for the week, still a very positive sign, certainly higher for the month, which is very positive. And it looks as though the trend wants to go a little bit higher. So let's clear everything off the screen again and go to our final market, which is going to be the CRB index, the Reuters-Jefferies CRB index. And I'm going to just get this in a little closer, maybe 2 years probably. And you can see here, if we this is a monthly chart again, you can see that our trade triangles are all negative. You've got our monthly, weekly, and daily all negative. If we go to the end of Q2, this market was trading at 339.27. And if you go to last month, we were trading at 342, even higher, 49. And last week, we were trading at 301.87. So here we are, even lower than last week. That is not a good sign in my book. That tells you the trend, just as our trade triangles have predicted, is very definitely on the downside. So let's pay attention to these markets, pay attention to the big trends, because they are important and you can make a lot of money, I believe, in these markets today with the type of trading we can do with our trade triangles. So, hey, this is Adam Hewison. We've taken a lot of time. If you'd like to get a try MarketClub for $8.95, go to our website. It's there on the special offer. And also you get automatically entered to win a free 1-year subscription to MarketClub. We'll put that on a very cool HP Wi-Fi touchpad that you will love. Hey, Adam Hewison. I'll be back tomorrow with the weekly wrap, and let's see how things close out today. But generally speaking, look at the trends. The trends will prevail, in my opinion. So I'll talk to you tomorrow. Adam Hewison for MarketClub. Every success and good trading today.